Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show right here on TFNN. Let's go over to my screen here. We're going to go over to the newsletters tab, okay? I want to take a look. Every Tuesday, we have Basil Chapman come on. Basil is the author of the Opening Call Subscriber webinar. He's also the host of the Tiger Technicians Hour right here at TFNN, 10 a.m. Eastern Time. Let's take a look here. This is a great time to get this. Not just because the material that Basil provides is phenomenal, which it is. You, of course, get access to the 90-minute live subscriber webinar that he just had in November 14th. That was Sectors and Stocks for the Next Market Phase. But the reason why I say this is the best time to do it is because, well, you go to the homepage. We have the Tiger Dollar Holiday Sale. You can get these Tiger Dollars are fantastic, right? You get $500, right? You're going to get 600 Tiger Dollars. It's basically like credits to all your purchases that you have with TFNN. So that's a 20% bonus. You can go to the next tier. That is $1,000 for $1,300. That is a 30% bonus. And then all the way, if you want to be the big player, at $1,500, that is 2,100 Tiger Dollars. That is a 40% bonus. So you can apply that discount right there when you buy any kind of thing we have, but you've got to check out Opening Call Newsletter. I'll say as well, as if this is your first time checking out Opening Call Newsletter, you can do this risk-free. I know we have a few new people here listening. You can do all of this risk-free. We have a 30-day money-back guarantee, so go in there, check this out. It is a fantastic newsletter. I always enjoy having Basil on. Basil, how are you doing?
Hi, Jacob. How are you?
Doing well. Quite a... well, at least my equity is a little bit shaky today, but that's all right. What are we looking at?
So let me go through this, quite a chunk I want to look at right now. So you can see this is on the left here is the Dow chart. Here's the weekly chart in the middle, and on the right is the monthly. Technically, the monthly is still very strong. The weekly is still strong, although the MACD, the moving average divergence has pulled back a little bit. This daily chart has had a huge pullback, and what's important about this is that I use the 9-period moving average and the 14-period moving average. When they cross, when the 9 goes over the 14 is positive. When it goes under, it says just be real careful. So a few days ago, the Dow daily chart went pink. That means the 9 was negative, and all the technicals are negative. Now have a look at this. On the bottom here is something called the slow stochastic. It's a set of moving averages, right, where the Dow is. So this divergence is something I've been discussing for a little while. One of the reasons why I've said to subscribers, I love our long positions. We've taken profits off them. We've still kept core positions, taken a little bit off, and on big pullbacks, that's what we want to add. And in fact, one of them, ARKK, which is the ARK, there we go, the ARK Innovation ETF, went from 125 back in 2021, November, down to 29, December of 2022. Now it's started to move to the upside, and you can see this weekly, the monthly chart is improving. Weekly chart is at a leg D. D is where I'm always, that's where other things can happen. The target on the upside is to apply the waveform, essentially grading the waveform and grading each successively higher peak. And D is where other things can happen. It can continue, like the daily chart of this ARK Innovation ETF. So we've been long for a little while, and I've said that I really like the rotation that we've seen through all the different sectors, with the Dow now weak, but then the QQQs rally up, and the SMHs had just enough impetus to move higher. And this has been one of the very best. So it went to 63.44. This ARKK is a symbol. Pull back, and I said, just for a trade, because I don't want to get into too many other things, because this is a period that looks quite toppy. Let's have a trade. So we've had a trade, and we're waiting for 63.45 to be hit. It almost hit it today. It went to 63.32 in this cup formation. So I just want to show you some of the patterns and the ideas that I'm promulgating at this particular time. And the weekly chart is still very strong. So this is an area on weakness we'll be looking to add to our position, because that's what I think we're looking at right now, the rotation. Then the AIQ, which is the AI. This is the AI ETF, the Artificial Intelligence ETF. Leg D in the monthly chart still very strong. Leg D in the weekly still very strong. Daily chart very strong. Same kind of cup formation that we saw in ARK, the ARK Innovation Fund. 40.65 was the high, and it's retesting. We've been in this for a long time. I like it. this is another area that if it pulls back, this is what we want to be looking at. Then I thought what I'd do is I talk about something I've mentioned on my show, and I'll do more of it tomorrow at 10. But I've been looking at gold, I've been looking at oil, and I looked at the defense stocks, the American defense stocks. So General Dynamics goes from 316 in end of November. Here it is 6 weeks later, is trading at 265. And I said, for weeks now, I said, the only way I can read this is that I think there's going to be some kind of peace in the Middle East. I hope there is. And then we just saw in the den, someone texted in to say that we are, someone texted in to say that the Saudis are going to have a deal, probably have a deal with Israel. So I think that that's kind of the way I'm looking at the market. There are sectors that are working very well. I wanted to, let me just check here. Oh, I talked about the XLF, the relationship of the big financials, the money center banks, and the KRE, that is the regional banks. And that had been working for a while with the money center banks. We have Bank of America. It's done extremely well as part of the money center banks. The KRE, the regional banks, did nicely, but now they're starting to pull back. And that's the reason why I'm saying raising cash here is really not, that is the thing to do, because there are going to be rotations through the different sectors. And certainly, look, you've got NVIDIA pulling back now quite sharply from the high of 152 back in November. And here it is at 129. And that's been, and Broadcom has taken the semiconductors higher. But we get starting to see fewer stocks lead the market. One thing I wanted to talk about, you mentioned Amazon. I love looking at round numbers. For a couple of weeks now, I've been saying, let's keep watching those round numbers. That helped us in April talk about the big decline that we expected. The semiconductors and the tech stocks, we had that. And now I'm starting to see more and more round numbers. 233.00 was yesterday's all-time high in Amazon. So it doesn't mean to say that's the top, but it's starting to look to me that even the really strong stocks are just getting what I would signify as shorter-term toppy action. So intermediate term, I'm still very positive. Longer term, still very positive. Shorter term, we've been talking about this for a little while. Raise some cash. There's going to be plenty of buying opportunities. But at the same time, if you've got very good positions, try to hold on, because if they've been good in this particular phase, they're probably going to be good for a little while longer.
Fantastic. Basil, thank you so much. We'll see you tomorrow morning, 10 a.m.
Thank you, Jacob.
Guys, seriously, recommend the opening call newsletter. You've got to check it out. You can do it risk-free, 30-day money-back guarantee. If for whatever reason it doesn't work, we're betting that it will. Stay right there. We're going to be right back with Tim Ord of the Ord Oracle right after this break.